Hi, I'm Tom Lydon, editor of ETF Trends here in San Diego at the Schwab Impact Conference, and I'm here with Steve Sachs, who's head of capital markets for Goldman Sachs Asset Management. Great seeing you, Steve.
Tom, always good to see you.
So a year ago, we were right here at this exact place, and you had just come out, Goldman Sachs, with their first ETFs. Tell us how it's going.
It's been a good year. So as you said, we launched about a year ago, a little over a year ago. We've got $2.5 billion in assets across the ActiveBeta suite of products, which consists of 5 funds across US large cap, emerging markets, developed international, Europe and Japan. It's ActiveBeta, it's our version of Smart Beta. And it's just really resonated well, particularly in the advisor community, and we've been, very fortunate to build assets and traction.
$2.5 billion at a launch for a year is unprecedented. So congratulations. What would you say made it such a great success? I mean, the brand itself, but you did a lot more than that.
Yeah, we did, and really, Tom, it starts with the fact that these strategies weren't pulled out of thin air to launch ETFs on. Quantitative stock selection, multi-factor stock selection is something that GSAM has been doing for many decades. The ActiveBeta strategies that actually existed inside the firm for a number of years. We had client demand. We've got a significant institutional business that uses the ActiveBeta strategies as benchmarks. Actually about 12 billion in assets on the institutional side, and now another 2.5 billion, as we mentioned, on the ETF side. So really it was that sort of grassroots demand from the institutional client base, and again, it's just resonated really well with the advisor base as well.
Yeah. So Smart Beta, multi-factor strategies. I mean, so you're really kind of getting the best of the factor investing from Goldman Sachs, which is fantastic. We haven't had huge challenges in equity markets and bond markets. That's going to be coming at one point. So it's really going to put these strategies to the test. Are you kind of excited about that?
Yeah, we are. So as a firm, we believe that, sort of the next several years at least are single-digit returns in the equity space. We think volatility increases, a little bit much like we've seen over the course of this year. One of the things that advisors talk to us most about is how do I allocate to Smart Beta, and they're really finding it difficult to allocate to single-factor Smart Beta funds. So the multi-factor approach and the ActiveBeta approach is across 4 factors that are equally weighted. Again, has really resonated from that perspective of, given what the market regime looks like over the next couple of years, lower returns, higher volatility, that solution or that core holding from a multi-factor perspective, again, it's something that advisors are very in tune with.
Okay, quickly, you don't rest on your laurels. I know your team's working on more. Can we expect more products from you in the coming months or year?
You can. We just launched our first fixed income product actually about a month ago, GBIL, GBIL, which is a short-term US Treasury vehicle, so really money market in an ETF wrapper. And that fund has some very unique features, and we think will be, very, very popular.
Money market alternative?
Money market alternative.
Yeah.
So we'll continue to look at, what our pipeline looks like in 2017 and beyond, right? The core of what we're going to do from a business strategy perspective, though, is focus on what Goldman is very good at. Quantitative stock selection, obviously, with the ActiveBeta suite. GBIL with our first money market, right? We have a massive liquidity management business to the tune of about $300+ billion. So we'll continue to focus on the core strengths for Goldman Sachs.
Excellent. Great, Steve. As always, good seeing you.
Thank you, Tom.
Thank you.